Well, let's talk more about the opportunities now in retail. Joining us now is Neuberger Berman analyst John San Marco. John, good to see you today. When you're looking at the earnings that have come out recently, it really does appear that there has been some resilience in the face of tariffs. How do you explain it?
Yeah, great to see you. Thanks for having me on. That's well put. I think tariffs are, one, manifesting a bit more slowly than expected. Two, I think the ability for retailers to mitigate it, whether it's pushing it back on suppliers, shifting country of origin, assortment changes, have all so far reduced the amount of pricing that they've had to take, the amount of pricing pressure they've put on the consumer. Now that's changing. I think it's very early. So, let's check back in and have this conversation every few months, because, I think we're just getting started on the pricing piece. And so the consumer hasn't really been tested yet on their ability to withstand some of the inflation that is to come.
And where will you be especially looking to see the impact on consumers and where there might be a divergence in the way they react to higher prices?
We're starting to see some green shoots in a few categories that had been have already sort of gone through a tough time. Home related categories. Beauty is a space that was white hot in COVID and then ice cold, and it seems like it's coming back a little bit. Optical retail is this other niche category that was unusually soft there, and so I think there's some pent up demand. So we're looking for some of these product cycle stories where either stuff that was bought in COVID now needs to be replaced, or something else is pointing to a prospective demand inflection.
When you're looking at the home improvement category here, how are you seeing where consumers are willing to put their money, where home building and the home builder sentiment might be coming into play?
We're probably in the late stages of a thaw there. You've seen consumers, put a toe back in the water, engaging with the category late last year. Smaller projects, smaller ticket projects, stuff they can do around their home, lighter touch DIY. And I think slowly but surely you're starting to see that crank up. Some of that is just comparisons. We're now 3 years removed from when existing home sales crashed and rates really froze the housing market. And so we're up, all of that has sort of that pig's gone through the python now. But also, I think this is a great example of the replacement cycle story I talked about. People spent like crazy on their homes five or almost 6 years ago now. At the beginning of COVID, and some of those things are starting to break. And just taking a step back, it's a great category. Home Depot is a terrific leader within this category. They've done a lot to help themselves, and so there's a natural growthy current that we haven't seen because of the cycle, and I think you're starting to see the early signs of that cycle shift.
John, it's great to see you. Thank you for your time this morning.
Thank you.